Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. Last Friday, global markets continued to decline, albeit unevenly. The S&P 500 fell by 5.97%, oil by 7.5%, commodity currencies lost around 2% on average, and the yield on 5-year US Treasuries dropped from 3.73% to 3.55%. However, the euro declined by only 0.8%, while the dollar rose by 0.58% against the yen. Today, the euro opened with a 68 pip downward gap, which it filled within an hour and 15 minutes. Since this morning, all instruments, including S&P 500 futures, have been rising. We believe the market has preliminarily absorbed the short-term effects of China newly imposed 34% tariffs on US goods over the weekend. On the daily chart, the euro has broken above the 1.0955 level. The Marlin oscillator is ready to resume growth after stabilizing in positive territory. A breakout above the nearest resistance at 1.0955 and at 1.1027 will open the way to the target range of 1.1110-1150. From there, a move toward 1.1276, the July 2023 peak, becomes likely, and at that point, a synchronized reversal with the equity market may occur, triggering a new wave of euro weekend. These would represent a typical crisis-style correlation. The Marlin oscillator shows signs of a reversal from the neutral zero line on the 4-hour chart. The price has consolidated above 1.0955. We expect continued growth toward the first target at 1.1027, followed by an extended move into the 1.1110-1150. And now it's time for GBPUSD. Let's discuss it with Paolo Greco. The average volatility of the GBPUSD pair over the last 5 trading days is 154 pips, which is considered as high for this pair. On Monday, April 7, we expect the pair to move from 1.2741 to 1.3049. The long-term regression channel is pointed upward, but the downtrend remains intact on the daily timeframe chart. The CCI technical indicator entered the overbought zone, signaling a correction pullback which has begun swiftly. The GBPUSD pair has entered a sharp decline. That move evolved into a prolonged correction, at the very least a correction. We still do not consider long positions valid at this stage, as the current upward movement looks like a disjointed correction on the daily timeframe chart. However, if you trade purely on technical signals, long positions remain relevant with target at 1.3184. Provided the price holds above the moving average line, it's a sign line on a graphic. The pound could continue to rise if Trump keeps imposing tariffs and other countries introduce retaliatory measures. Short positions remain attractive with targets at 1.2207 and 1.2146. because the upward correction on the daily timeframe chart will eventually end unless the broader downtrend ends first. Even if we are witnessing the beginning of a new uptrend, a downward correction is needed, as the pound has risen far too sharply in recent weeks. That's all for today. Wish you best of luck.